Estate Show with Pat Lopez, where we talk everything real estate. Today, my guest is Margo McDonnell, president of 1031 Corp. Margo, welcome to the show.
Pat, thank you for having me.
Okay, so a lot of people may not know what a 1031 exchange is. So, what is it?
It is a tax strategy allowed under Section 1031 of the Internal Revenue Code that provides that no gain or loss will be recognized on the exchange of property held for business use or investment. Simply put, it's the way for the seller of any type of business use or investment property to defer the gain when buying another one, as long as it's structured correctly.
Okay, perfect. Now, before we get into all the ins and outs of a 1031 exchange, tell me your story, your background. How did you get started?
So I actually started in this industry 29 years ago today as a salesperson selling 1031 exchanges. A few months later, the person who hired me came to me and said, "Hey, the person who has been running it
Right.
is no longer with the company. So I'm giving you the opportunity to run with it. You can have any title except president."
Right.
So it took me a few years, but I eventually did get that title. But I made it my baby
Right.
before I had babies and have had a blast growing this company and educating people on 1031 exchanges.
Okay. Now, with a 1031 exchange, it's part of the tax code,
The
right?
federal tax code, yes.
Okay. And is there any limits to where you can do one in the United States?
No, the great thing is the flexibility. You can buy property anywhere in the US. And because of that flexibility, you can buy any type of property held for business use or investment. You can sell one and buy 30 or sell 50 and buy one.
Okay. And you're located in Pennsylvania, right?
I'm located in Pennsylvania. We're in the Philly burbs. We're in Collegeville, Pennsylvania, but I have an office in Central Oregon and a number of employees scattered across the country.
Okay. And then approximately how big, how many employees do you?
We have 28 employees.
Okay. So if somebody wanted to get a hold of you, learn more about it, I was on your website. It was really good, really interactive. So what is your
Yes,
website?
it's just 1031corp.com.
Okay, very good. And before, like, I do have this question. So, what made you? Were you working for a title company? Like, what made you start off or gravitate towards a 1031
No,
exchange?
our children would not appreciate this, but I just answered a classified ad in the Philadelphia Inquirer
Okay,
that talked about using your sales experience and your management experience and applied for the job.
okay,
So I actually worked in ice cream for 11 years before this.
okay. And
Not related.
it's really funny how just things happen.
Things
It's
happen.
amazing. Yeah.
Yes.
And then how long
Yes.
have you been doing this?
29 years today.
Okay, 29 years. So you sort of know what you're doing,
I
right?
sort of know what I'm doing.
Okay.
Most days.
Most days. Okay, so a 1031 exchange. Give me an example of like a most common 1031 exchange. Like,
Sure.
what is that?
Sure. So a great example might be someone who is selling a single family rental that he's owned for 10 years.
Okay.
And wants to sell that and buy a multi-unit building so that he would have greater cash flow.
Okay.
So let's just use the example where he's selling the property for $600,000 and he wanted to defer all the tax. That would include his state income tax. It would include his federal capital gains, and it would also include all the depreciation recapture.
Okay.
So he can roll all of that into the new property. And once you leverage it, you could really use that as a powerful tool to buy something bigger. And in this case, that multifamily property and that higher priced property would allow him to create greater cash flow,
Right.
have more depreciation available moving forward, and long term probably enjoy greater appreciation.
Okay. So the key here is I have an investment property, not primary residence, right?
Correct.
And I sell an investment property instead of paying a capital gains tax that I would potentially have on the profit.
Correct.
I am postponing that.
You are postponing it. The gain is deferred as long as you own the next property.
Okay.
If 5 years from now you want to sell that property and it's still a business use or investment property and you want to buy another investment property, you can defer the gain again. There's no limit on the number of times you can exchange. every time you do, IRS is keeping track. They have a little IOU, locked in their back vault somewhere. But when you do an outright sale down the road, if you ever did,
Right.
that is when the tax would come due. But if you never sell that property,
Right.
or maybe you've done 3 exchanges and you're holding one, someday down the road, when you pass away, your heirs will inherit that property and all of your assets with a step up in basis,
Right.
meaning they'll inherit the property at the current fair market value at the time of death. So all the gain is forgiven, and you have had the opportunity to use 1031 to grow your real estate portfolio with pre-tax dollars
Right.
and potentially pass that wealth to the next generation without federal tax consequences.
Okay, so let's break this down so it's
Sure.
super simple. I turn around, I sell a property for $500,000, and let's just assume the profit is the 500,000. I've owned it for years, so
Okay.
all the tax basis, depreciation, so it's $500,000. I would typically have to pay, depending on the tax bracket, long-term capital gains in between 15 to 20%, right?
Correct.
Okay, so let's just use 20%. It's a simpler number for
Yep.
me. So then that would be 500,000. That'd be $100,000 I would have to potentially pay the IRS.
Correct.
So instead of paying the IRS that $100,000, I just roll it into the next property.
That's exactly right.
Okay, so instead of me having 400,000 to go into the next property, I have the whole 500,000.
Correct.
Okay, I didn't have to take off my shoes and count my
No,
toes.
no. But that's the great thing about 1031, because yes, you deferred $100,000 in tax,
Right,
but more importantly, you took that $100,000 and put it towards your next property,
right.
so that 100,000 continues to appreciate for you.
Okay. Now let's get into the 1031 exchange. I was, like I said, I was on your website. Great. It explained a lot of information for me. So what is a like property? I saw that on there.
So the term like kind
Mhm.
confuses a lot of people, but the term like kind refers to the nature or the character or the use of the property.
Okay.
So any kind of property that you can think of could qualify for 1031, as long as it's not held for personal use or held for sale.
Okay.
So just about anything else you can think of will work.
So as long as you're going from an investment property to an investment property,
Correct.
and it could be others, but this is a real estate show, so we'll stay with real estate because it could be like business and other assets, other type of things, or no?
No, it's just real property. So
Okay.
in the old days, you used to be able to do some business assets, but unfortunately that was repealed as part of the Tax Cuts and Jobs Act.
Okay.
So now it's truly real estate.
Okay. So it's good.
It's good.
It's good for the show. Real estate.
It's good for the show.
Okay. So now I also saw there's timing with this.
Yes.
So explain that.
So there are 2 time periods, and they're both clicking at the same time. They start the day that you sell your old property to the buyer.
Mhm.
From the date of closing, you have 45 days to identify property you're interested in acquiring, and running at the same time, based on calendar days, not business days. You have 180 days to buy whatever you want to buy
Okay.
to complete your exchange.
Okay. So I have a property. I put it up for sale. Once it goes to, once I sell the property, I have 45 days to identify one or more properties, correct?
Correct. Starting with the date of closing.
Date of closing. Okay. Now I turn around, I sell this property, this investment property. Who gets the money? Where does the money go?
So the role I play in the transaction is called a qualified intermediary, or a QI, because that's a bit of a mouthful. But the qualified intermediary is like the middleman, and we coordinate all the details. I like to say we're like the quarterback in a football game, and we are the ones that coordinate all the details with the closing agent, the real estate professionals, to get copies of the agreement of sale. We work with your client to explain all the time deadlines, keep them aware of all the time deadlines, hold their sale proceeds, sign the closing statement, and we also hold their sale proceeds.
Okay.
So the funds are deposited into an account that we set up for their benefit. So when we set it up, it would be titled 1031 Corp for the benefit of Pat,
Right.
with Pat's Social Security number on there. And we'll give you instructions to log on to the bank website, see your account balance, see the interest being accrued, and it's a direct deposit for the replacement property.
Okay. So once I make settlement, I have 45 days to identify another property or 2 or 3.
Correct.
Okay. So it would be advisable in this market with multiple offers and everything else, potentially to, once you put the house up for sale, start looking for another home, right? Or
Absolutely.
not another home, another investment property.
Right. I would strongly suggest having something under contract when you identify it. It's not required, but in today's market, we both know that if you identify property today,
Right,
you may not get it tomorrow.
right.
But you do have to buy something that was identified.
Okay, so from the day I make settlement, now I have 180 days to make settlement on the new,
The new one.
The new
Whether
one.
you're buying 1 or 2 or 4,
Right.
they all have to close by the end of that 180th day.
Okay, so I turn around, I sell a property, let's just assume it was the 600,000 that you
Okay.
mentioned. I sold it and I owned it free and clear because I've had it for, 100 years. So that's 600,000, you're holding that, and then I turn around and buy a new property. So it has to be 600,000 or more, it could be less. Explain
To
that.
defer all the gain, maximize that tax deferral, you have to buy something of equal or greater value and equal or greater equity. So simply put, if you sell for $100,000 and have $5,000 of closing costs, the new property, including closing costs, should equal at least $95,000. If from that you pay off the balance of your mortgage of $45,000, all $50,000 of equity has to go into the new property. If you buy for less value or you reinvest less equity, you do have to pay tax on the difference.
On the difference, okay.
Yes.
So what you said was closing costs are also included
Yes.
on there. So
Yes.
if let's say hypothetically I bought a property for $550,000 and closing costs are 50,000, I have the whole 600, that would be okay.
That is correct.
Okay, very good. So we have like type of properties, investment property, real property, okay? We have the time frames. What else? Reversed, I saw on your website, the reversed exchange. So what is that?
Yes. So a reverse exchange is just backwards. For whatever reason, you cannot give up title to your old property just yet,
Mhm.
but you're ready to acquire the new property. And you can't just buy the new property because you'll have 2 properties and that's not an exchange.
Right,
So what could happen is we, the qualified intermediary, or we have a sister company that does that. We form a brand new special purpose entity. We do a single member LLC of which we're the sole member, and we buy that replacement property directly from the seller using money that you would loan to us,
right,
either directly or from you and a third party lender.
okay,
And we enter into an agreement that says we can only sell the property to you. We cannot make a profit on it.
right.
And we are doing this solely to assist you with a 1031 exchange. And you have 180 days to find a buyer for your old property, transfer title of that property to the buyer, and then take title to this new property. We can transfer title to you through a deed transfer or simply assigning the membership interest in the LLC.
Okay, so the 180 days is still there. It's constant
It's
in between
really a
the two.
mirror image.
Right. Okay. And with that one, you found this house or this multi-family property, whatever, that you have to have. It's great. So you have to get financing for that on there, which you're going to own or have the cash to be able to do that.
Correct.
Right. Okay. So then
Yes.
it gets a little trickier there. And then because you are owning the property,
Mhm.
because it can't be in my name, then there's potential in Pennsylvania with transfer tax, right?
That is correct. There is the potential. Well, there's not potential.
There is.
You're definitely going to have to pay transfer taxes. We may be able to avoid some of it, but not all of them.
Okay, so there's double transfer tax.
Double transfer taxes, additional fees because we're going to hold title to that property.
Okay, and that's Pennsylvania. There's transfer tax. Not all states, have
That's
transfer
right.
tax. So
That's right.
you're a little penalized, and especially in Philadelphia, you really get beat up
Yes.
with that. Okay. Now I also saw an improvement exchange. I've never heard of that,
Yes.
never whatever until I went on your
So an
site.
improvement exchange is a great strategy that would allow you to buy something that was less than the $600,000 property that you sold.
Right.
So perhaps you found a property for $400,000 and it could easily take $200,000 of improvement. But again, you can't take title until those improvements are complete. So we'll use the same structure we used in the reverse exchange, where we form a single member LLC. We take title to the property using the exchange funds or third party third-party financing
Right.
or a combination of both. And we'll take title to the property. We'll sign a project management agreement with the exchanger. So they'll oversee all the improvements, and they'll also approve all the withdrawals. And then they have the 180 days to not necessarily have to complete all the exchanges,
Right.
all the improvements, but only the improvements that are completed and paid for can be added to the purchase price.
Okay. So that one, depending on how much work, the scope of work, you really have to have permits, contractors, everybody
Yes.
in place because that 180 days will go
That's
pretty
exactly
quick.
right.
Okay.
And when it is an improvement exchange, the way that our clients have been most successful is when they're planning ahead, because we'll need to have ideally they have the permits in place, they have
Right.
the contractor, and as soon as they sell the old property, we could take title to the new one and start improvements immediately.
Right. Okay. Okay. So we talked about the reverse, we talked about the improvement, but the most common is just the standard 1031 exchange, right? Where
Yes.
you sell a
Yes.
property and
That's
then
exactly
you have that
right.
180 days or 45 days to identify and then 180 days to settle
Right.
on that. Okay.
Right. They probably account for about 5% of our business.
Okay. But the other ones.
The reverse exchange.
Oh, the reverses. Okay.
Yes.
So 95% is the normal.
Yes.
Okay. And then typically, what are the dollars? What's the most typical dollar figure of exchanges? What does that look like?
That's a great question. And there's no right answer to that. I'm asked that question a lot, but you have to look at each individual situation,
Mhm.
because what if you bought a property in the Poconos in the 1970s thinking this is going to be the next great place,
Right.
and I'm going to build a rental, or I'm going to build my dream vacation home, but you've been holding it for 50 years and you paid $5,000 for it,
Right.
and now it's worth $70,000. You have a $65,000 gain
Right.
on that little tiny property. So it makes a lot of sense for you to do an exchange. I haven't found a magic number where it makes sense, or a magic number where I would say, hey, that may not work for you.
Mhm.
Um, I've had people come to me and their tax bill is $10,000,
Right.
but they would rather pay us $1,200 to not pay that $10,000. Maybe they don't have the 10,000.
Right.
So unfortunately, there's no one magic number. I would say 1031 is a great tax strategy, but it's not the right one in every situation.
Mhm.
The important thing is to talk to your tax advisor and look at your particular situation, not just what you owe, but what you're trying to accomplish, and figure out if a 1031 makes sense, if it's a stepping stone to help you accomplish all your goals, and how much you're going to defer by doing it.
Okay. And then how is the fee structure? Is it a percentage or
We
how
just
does that
charge
work?
a flat fee based on the sale price of your property.
Okay.
So it's a pretty nominal fee, usually one of the least expensive charges on the closing statement.
Okay. And then if somebody contacts you guys,
Mhm.
in turn, you can take it so you don't have to hire an attorney or anything like that? Or
Right. I will always tell you, if you should have an attorney in the transaction, you should still have an attorney in the
Right.
transaction. But as the qualified intermediary, we will take care of all of the 1031 details. We don't actually fill it out on your tax return. That's something your accountant would do. But we will make sure that your accountant has all the 1031 documentation, all the closing statements, to help make that process as easy as possible.
Okay. Now, is there anything I missed? Is there anything somebody should,
I would just remind people, if you're thinking about doing a 1031, reach out to a qualified intermediary and ask questions. You could certainly reach out to your accountant or your attorney as well, but you have to set up the 1031 exchange before you go to closing. If you are sitting in closing right now and you're listening to this on your AirPods, you could still do it. But if you get out to the car and then call, it's too late. So once you are in control of the sale proceeds, it's too late to do an exchange.
Okay. So once you sign the sale of that agreement of sale, that money has to go to you guys.
Right.
Okay. So
right. So ideally, once you sign the agreement of sale, that's the time to get the qualified intermediary
right. And get that going.
involved. Absolutely.
Okay. Well, great. Once again, go to the website. I learned a lot on that website. It was very informative.
To hear that.
Great. So, well, thank you for being on the show.
Pat, thank you. I really appreciate the opportunity.
Oh, great. Well, that's the Real Estate Show with Pat Lopez. Be sure to follow the show on Facebook and Instagram and subscribe below. Super important. Leave a comment. Tell me some topics you'd like me to cover in the future. This show is everything real estate, no limits. I hope you enjoyed the show, and thanks for watching.